Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a great week so far. Today we're going to be delivering our daily cryptocurrency market update, where we not only look at the cryptocurrency realm, but we look at the external world around us. As we know, we are impacted by a number of factors within other markets, the Forex market being a big one. And certainly we're also impacted by decisions that are taken or not taken by the Federal Reserve. And that's why we're seeing a kind of slowing down and headwind, or Bitcoin in the crypto space running into headwind, due to the fact that the Fed are essentially talking about upping interest rates. This has an uncertain effect on markets, and people will risk off, they'll take risk off the table. And crypto is a prime candidate for mitigating risk, in the sense that people will not take riskier bets or more speculative plays. They'll go with safer, certainly your big money will go for more safer plays than something like crypto, which is still small, relatively speculative, and certainly with some of your altcoins has a lot less liquidity than these bigger markets they can move easier in and out of. So we're going to be talking about that in this video. I'm going to be showing you a number of interesting things. We're going to be revisiting the illiquid supply and showing you that every time there's a pullback, it gets bought up by long-term hodlers, by whales, so on and so forth. And this is ultimately all tying in with, you guys know my overarching stance on the crypto space. It's going to continue. I think at $2 trillion in terms of a market cap, we've got a long way to go. We can see the market's continuing to sell off. Bitcoin, of course, is pressing on everybody's shoulders. Cardano, which has done exceptionally and has resisted the kind of tide that Bitcoin brings for a while now, is even seeing a bit of a downside as a result of it. But it's all healthy structure, in my opinion, and ultimately I believe we're setting up for continuation. And we show you every single day on these updates data that suggests this, and this is just another piece of data. We're going to be getting into a number of other things. This is to do with El Salvador. Interesting tweet from El Salvador's president, basically saying they don't care about the fact that they're getting downgraded based on their sovereign debt due to Bitcoin. Because they've kind of stuck their middle fingers up to the empire, to the dollar as the global reserve currency, as it impoverishes more people than it benefits. Being a reserve currency, the US have a great deal of power with their currency being the world reserve. And we can see throughout history, nations that have implemented their own currencies sort of globally or across the world, throughout their sort of conquests, have done very well off the back end of it. It's been a staple point in there, or it's been a staple in their reign. It's been something that's contributed to such a successful reign from many of these kind of rulers throughout history. And we're seeing the same thing today. So somebody like El Salvador sticking their middle fingers up, it's costing people money. El Salvador's new Bitcoin wallet could cost Western Union $400 million a year. Western Union is a payments remittance service. And of course, with Bitcoin, it completely cuts them out and eliminates that kind of third party. So we'll talk about that a little bit. Some more sort of data that suggests, we are set for continuation. We're seeing strong hands kind of step in. And the hash rate completely recovered and has actually gone on to make new all-time highs. This is after China banned it. We knew that 50% of the hash power at one point was from China. What China did essentially was benefit Bitcoin because the hash power, essentially the mining power, which goes into running the Bitcoin network, dropped by half and then got decentralized in the sense that it moved all over the world and has been spread around. And we've seen a huge uptick in the USA with the mining and the hash power coming from there. So all the fundamental metrics for Bitcoin look strong. We look at Bitcoin so much and we pay so much attention to it because it really drives the direction of the market as a whole, and you can certainly see that at the moment. So remember, there's still this macro battle. We'll dive into the video now, guys. There's still this macro battle between the dollar and Bitcoin, and you can see we're having a down day. The dollar is continuing to show strength. So I'm hoping the dollar continues to roll over. The dollar's seeing sort of strength and a bit of tailwind, not headwind, due to the fact that the Fed, if they did up interest rates, and certainly they're talking about doing it 3 to 4 times a year, would bolster the dollar. It would make it more formidable and stronger, as it would become more expensive to own and really gain sort of strength against, or at least to the midterm, strength against a lot of these other assets. And of course, crypto is one of those. Probably more affected, actually, Bitcoin by the dollar than a lot of other assets, equities, commodities, and so on out there. So is this going to happen? That's the real question. Now, the Fed have to essentially tackle inflation in some way, shape, or form. They cannot allow it to run. They can't keep with the stimulus. But I would argue that given what's about to take place over the next months or so, that stimulus is going to sort of subside. People are going to get tax bills, etc., etc., etc. In the US, they can't really rush to up interest rates because they would cause further turmoil. And not only that, if the Fed up interest rates for the US dollar, that affects a whole basket of other countries that hold US dollar debt, many of them emerging poor countries, and it would cripple them. So they can't really do anything too significant, even though they've kind of, I would say, bluffed to a degree by saying that they are going to have to take drastic measures to combat inflation. I would argue that potentially it doesn't come from interest rates. It perhaps could from a reduction of stimulus over a sustained period of time. So we'll see what happens. Whatever happens with these interest rates is going to affect Bitcoin. You can guarantee if we had a really high interest rate set, Bitcoin would see downside at the back end of it, and vice versa. If it's not that bad, we might do okay. And if it's negligible, which I think it will be, Bitcoin could really run on it. But one thing is for certain, they're going to have to do something in regards to tackling inflation. And there's this kind of battle going on between socialism and capitalism, in the sense that what we essentially saw over the past 2 years was socialism kick in with in the form of UBI, universal basic income, or essentially that with people getting furloughed. Certainly that's true here in the UK. I'm not sure what it was called in the US, essentially where people were getting paid to stay at home, have a wage and not go to work. That essentially is socialism, and that's what Jerome Powell is trying to stop. So he knows he can't move towards that. He's kind of that frontline defense, but at the same time, that it's this real balancing act that's taking place, and that's why you're seeing a lot of headwind in these markets. It's very, very apparent. So, of course, Bitcoin, the crypto space, is acting in accordance. Shaky kind of grounds at the moment. We know that what took place here caused this, and now you're seeing a cool off from it as that stimulus is sort of stopping, and the deflation or the inflationary properties that were at hand are kind of coming to an end. And we know with the dollar, for example, this was your March 2020. This went down. Bitcoin, vice versa, went up. And now you're seeing a resurgence. And these charts are mirrored. You need to always look. I'll very quickly bring it up for you at your charts because they are mirrored to a T pretty much, guys. You can see dollar down, Bitcoin up, dollar up, Bitcoin somewhat down and running into headwind. So something definitely to pay attention to. Let's talk about Ethereum. Ethereum just following Bitcoin. Cardano did very well. I'm still not worried about Cardano at all. I ultimately think it's going to set up some sort of a cup and handle structure, and we are going to see that continuation given the fundamental reasons for it. This was, of course, the El Salvadorian president basically saying he doesn't care about the fact that they've been downgraded in terms of their sovereign debt due to holding Bitcoin. This is going to cost people a lot of money, El Salvador. This is what I mean. There's ripple effects. And this, of course, is going to create enemies and people who may seek to go after Bitcoin. But there's been many people that have tried and few have succeeded. In fact, none have succeeded. That's why it's here today. JP Morgan, make no mistake, Bitcoin and crypto are here to stay. And in my opinion, it absolutely is. This is the illiquid supply against the Bitcoin price. Now, what you can see here is that the illiquid supply, for the first time in a long time, is actually overtaking the liquid supply is actually illiquid supply is actually overtaking the price. And you can see that a liquid supply and price are very correlated in the sense that when we see a huge dip in the illiquid supply, meaning supply that is held and isn't traded back and forth on exchanges, typically that correlates with the price moving down. I would argue that this is going to become realized soon, and we're going to see a price adjustment in accordance with it. We've just got to battle quite a few of the headwinds that we're currently in, which are causing people to sell. This is short term, in my opinion. I think people will make their own minds up and sort of work out that, hey, look, over time, Bitcoin has definitely proved itself as a valuable store of value, or a formidable store of value. And I think that's going to continue. And this is why we're seeing countries start to join, and we're also seeing corporates start to get into Bitcoin, because it's going to serve them more holding Bitcoin than it is dollars. And this is certainly what countries realize. And we looked at the fact that countries continue to adopt Bitcoin in yesterday's video. Like I say, hash rate back at all-time highs. And this was just another thing. This is a cost basis of short-term hodlers increased relative to long-term hodlers. Cost basis of long-term hodlers increased relative to short-term hodlers. And you can see short-term hodlers typically lose, and that's because retail is typically the short-term, whereas the long-term continue to succeed. So it's all, and there's a trend kind of going on with this. So it's all coming together nicely. I think the fundamentals are there, and that's really what I'm paying attention to. I'm not worried about the sort of volatility. We have always set out for you the fact that you had the potential to do something like this, where you set up this kind of a structure and see a break in the same way that you did here. We've called this and this similar. This is a big version, this is a small version, and ultimately they both led, or are both, in my opinion, going to lead to an upside continuation pattern within a larger pattern. So that's really all I have for you in this one, guys. I'm going to love and leave you on that note. Just a quick daily update on the crypto space. I'll see you all in the next video. If you enjoyed the content, like, it's always appreciated. So as a comment, and I'll catch you all in the next one. Thank you very much for watching, guys.